Namaskar, Shubhkamnaye. I'm Ramachandran G Rajan from Kriya Sakti. This video is aimed at explaining why India should go ahead with issuing dollar-denominated debt, sovereign debt, in the US and European markets. It's very important. I begin with my recommendation. Hearty greetings, Namaskar, Shubhkamnaye. India should go ahead with issuing dollar-denominated debt in the foreign markets. I begin with this recommendation. Dr. Raghuram G Rajan, a former governor of the Reserve Bank of India and a chief economic advisor, has advised India against issuing dollar-denominated debt. He said that India will reap no real benefits and that such issuance will be risky. So let's say this again. India should go ahead and issue dollar-denominated debt, sovereign debt in the foreign markets. And it should overlook Dr. Raghuram G Rajan's discouragement or advice that India should not issue dollar-denominated debt. There are three ways in which we can argue this. The first is Dr. Rajan lacks aspirational force or fervour, doesn't possibly share the raw aspirational energies of India. India wants to become a $5 trillion economy. Dr. Raghuram Rajan has advised India that it should not issue dollar-denominated debt. He's explained it very cogently. He said that India should not issue dollar-denominated debt because it will not reap any real benefits and that it will be risky. My view is that India should overlook Dr. Rajan's advice, specifically because it's his advice. He's probably too ill-informed, lacks the aspirational fervour of normal Indians, and is probably very old-fashioned. So there are three ways in which I'm going to look at it. He's old-fashioned, lacks the aspirational fervour, and he's ill-informed. The first part, of course, is that of aspirational fervour or force. India seeks to become a $5 trillion economy. We are measuring our economy in dollars, and how dare we do that? But it's nice. It's like a kid wanting to grow up in the block and be a big guy. So we aren't talking rupees anymore, we are talking dollars. And in this context, it seems to be very logical that the cost of money should be measured in dollars and that India should indeed issue its debt abroad in dollars, dollar-denominated debt. So what does it mean to us in the context of the issuer and the investor? When an issuer issues paper, sovereign paper, treasuries, there are two kinds of risks, basically the credit risk and the currency risk, because not all countries are dollar-denominated economies. India is a rupee-denominated economy and it expects buyers to buy it in dollars. So when India issues dollar-denominated debt, effectively to the investor, there's no further currency risk. And that's exactly why Dr. Rajan says that this currency risk would belong to India. And that's the reason why Dr. Rajan says India should continue to issue rupee-denominated debt and ask foreign investors to come through the portfolio route after registration here, so that the rupee risk or the rupee-dollar risk will not belong to the Indian government. The repayment will be made in rupees. But it's very naive. At the end of the day, in the context of all equities and bonds, the risk pertinent to the papers, payoffs, always belong to the issuer. Though it's borne by the investor would pay such a price as to ensure that the reward for bearing the risk is commensurate with the risk. So whether it's a rupee-denominated paper which ultimately gets invested in by a foreign investor through the portfolio route, or a foreign investor directly investing in dollar-denominated debt, the risk of the currency would indeed belong to the Indian government, because in the portfolio route, Ultimately, the Indian government may feel a bit smug that its repayment and payment obligations, repayment of principal and payment of interest are indeed in rupees, and that it escapes any currency fluctuations. But this is exactly what the investor would say. Because the currency fluctuations belong to the investor would pay such a price as to ensure that the risk is completely compensated through the reward. So it's a very daft argument that India would be better off issuing rupee-denominated debt than issuing dollar-denominated debt. Either way, the risk of the currency fluctuating would belong to the Indian government. There's no way in which you can mitigate it. But then let's also examine this risk here. Risk means the chance that the actual outcome is different from the expected outcome. It's variance. For example, Virendra Sehwag was a risky batsman, but he has those 2 triple centuries and 1 very high double century against Sri Lanka. The 2 triple centuries came against Pakistan and South Africa, and the very high double century came against Sri Lanka at the Brabourne Stadium. And he's risky because he has 16-0, 16 ducks in test matches. So that's risk, up and down. In the context of currency fluctuations, when you say that the Indian government faces the currency risk, it could mean the rupee appreciating against the dollar or depreciating. So you need a forward contract. It's a symmetric risk, and this risk can be mitigated. So let's work on the risk part of it before we go back to what Dr. Rajan said. Dr. Rajan has said that issuing dollar-denominated debt does not offer real benefits and that it is indeed risky. So the risk part of it is in this manner. All risk ultimately will belong to issuers. Investors will pay such a price that ultimately this risk is compensated for through the expected return. And now getting to the currency risk, whether India issues dollar-denominated bonds or rupee-denominated bonds, the risk of the currency appreciating or depreciating would indeed belong to the Indian government. Dr. Rajan has been extremely simplistic and perhaps a bit daft in selling his argument of no real benefits and great risk here. Now let's go on to the benefits part of it. Dr. Rajan has kind of taken on the tentative idea of the yield curve. But what Dr. Rajan doesn't say in his well-publicized article or blog in the Times of India is that he only sticks to the yield curve but not to the impending death of LIBOR. LIBOR came into being under the framework of the British Bankers Association and has now been found to be open to fraud and manipulation. So LIBOR will die in 2021. We are now in July 2019 and LIBOR would die. Does it matter to us? Yes and no. No, to start with. India was never a LIBOR currency. It never was. So all these things didn't matter. At one point in time, the Canadian dollar, the Australian dollar, the New Zealand dollar, the American dollar, the euro, the Japanese yen, the Swiss franc, the British pound, the Norwegian krone, the Swedish krona, the Denmark krone were all part of the LIBOR framework, but the Indian rupee wasn't. But India now gets a chance to go for the big shot, aspirational fervour. But LIBOR would die in 2021. We are now in 2019 and SOFR would replace LIBOR. Secured overnight financing rates would replace LIBOR. LIBOR was open to fiddling, a lot of meddling and fiddling by the banks. It was not openly traded. By contrast, SOFR emerges from the repurchase prices, repo rates of treasuries. So when the Indian government issues a dollar-denominated sovereign treasury and it gets traded and it's there to be used as in the repo markets as collateral, then we get all the rates. It's not the yield curve that matters. What matters actually is the overnight rate, the fortnightly rate, the monthly rate. In the absence of LIBOR, we need a trade mechanism to reveal interest rates embedded in our own treasuries. So SOFR is the basic aim or focus or objective of the Indian government, and we ought to be there in 2021. And this is the right time to start trading Indian dollar denominated treasuries. It's a very important objective the government has. For a $5 trillion economy, there will be much trade, imports and exports, inward bound capital actions in the trade account, in the current account, and in the capital account. And we need to start trading our treasuries in dollars so that the real benefits of looking at interest rates will be ours. That's the real benefit. The second part is interest rates drive currency prices. So the Indian rupee has to be priced properly, very properly. You can't let it get underpriced or overpriced because that would impair imports or exports. We need to be currency neutral in our focus or objective to become a $5 trillion economy. We don't want to be manipulating currencies through sterilization, building reserves. We'll talk about reserves in a later video, but the point is understanding the linkage between interest rates and currency prices is very important for an aspirational economy. It's not merely the yield curve, and it's absolutely improper or unfair on the part of Dr. Rajan to merely talk about the yield curve and say that the only place or only tenor for which we have liquidity is the 10-year bond. That's not the point. We need liquidity in 6 months, 1 month, 2 years, 3 months, 3 years, 5 years, all in between. In the context of the repo curve, we can use or build by getting the treasury prices. So that's a very important plus. The second part actually is about the aspirational fervour all over again, and I think it's all about Dr. Rajan being quite old-fashioned. Dr. Rajan still lives in a world where India issues bonds because it needs money. It's always a borrower's perspective that he has in mind. But what about investors wanting Indian paper? Why can't India rise above the ordinariness, rise above and say, hey, look, you know what, we've got dollar paper and this is what you lenders want. We're satisfying a global market where investors want to invest in India. We're satisfying the demand for Indian paper denominated in dollars because India is going to be a very big economy. It's not a small, limping economy the way Dr. Rajan sees, where we're always borrowers wanting money and we just have to make a choice between issuing paper in rupees and issuing papers in dollar. That's incorrect. There's a huge lending market, investor market, which says, hey, India's a new kid in the block, wants to rise above the ordinary, and I think we need to buy Indian paper in dollars. And the second part is they start comparing us. They like the way in which a treasury is doing. So once you take away the currency price risk, India's dollar-denominated paper will only be signaling credit risk. And in the bunch of nations that may end up issuing dollar-denominated paper, foreign investors get to see India's credit risk. Very important. An aspirational economy should be seen to be credit-worthy. We've always seen it in the context of borrowers wanting money, but how about lenders wanting to lend money? So the real benefits are very clear. India gets to be ready to join the SOFR market, the Secured Overnight Financing Rate market, very credibly, and all the intermediate prices, the interest rates that get revealed will have an impact on the exchange rates, very clear. So it's not just the 10-year yield curve. That's a very improper way to do it. And this is very clear because when Dr. Rajan sees it only as a borrower's need, he forgets to look at lenders. He's very old-fashioned. He's very old-fashioned. Let me say that a couple of times. He lacks aspirational fervour. He's very old-fashioned. And he's also ill-informed by merely looking at the yield curve and not looking at the debt, the impending debt of LIBOR, and that we need to go to SOFR. We're getting ready. So India is a proactive economy. We have to congratulate the government of Prime Minister Shri Narendra Modi. Fervour with which the Finance Minister, the Honourable Finance Minister, Srimati Nirmala Sitharaman, has suggested that India should be issuing paper in dollars. Today is a Sunday. I'm Ramachandran from Kriya Sakti. I don't belong to the bunch of 40 economists who met the Prime Minister on the 22nd of June to tell the Prime Minister what to do. Those economists meet the Prime Minister in large groups. But my video is shot only with me. As Rajinikanth would say in one very famous film called Shivaji, Singam Singala Tavaru. I want to finish the story this way. Mahatma Gandhi was the father of the nation. And I think Dr. Raghuram G Rajan is the father-in-law of the nation. Very critical, very uneasy with the way India is progressing. Let me say this again. Mahatma Gandhi was the father of the nation. I think Dr. Raghuram G Rajan is the father-in-law of the nation. I can't call him the mother-in-law of the nation because of the gender. And there's another reason why I want to say this. Kyonki Bahu bhi kabhi saasti. Very important. The daughter-in-law was once the mother-in-law, at least in the context of the Duchess of Cornwall and Madame Brigitte Macron. You know that they are senior people who became daughters-in-law in other homes. So it will be very inappropriate. Incidentally, Kyonki Saas bhi Bahuti is the original. I just made it into Kyonki Bahu bhi kabhi saasti. So Dr. Raghuram G Rajan can't be called the mother-in-law of the nation, but it would not be unfair to think of him as the father-in-law of the nation. Very stern. And let's also add one thing. Dr. Rajan once said that India's economic performance is akin to this. In the land of the blind, the one-eyed man is a king. And king means Rajan here. India should indeed issue dollar-denominated debt. There are fantastic real benefits, real economy benefits. And the risk, of course, will always belong to the issuer. Whether you issue paper in rupees or dollars, it's always the issuer who bears the risk because the investors will price the paper accordingly. Thank you very much. Thank you for watching me.